Are you ready? Are you ready? Are you ready? Let's go.
Welcome to Unpacking the Home Advantage. My podcast is to help you understand the mortgage loan side through my experience and knowledge. My name is Paige Ashby. In today's episode, we're going to talk about DPA. Have you heard of this term? It means Down Payment Assistance Program. There are more DPA programs than you think, and they're not all the same. Some are forgivable, some are silent, and some will go towards your closing cost. Stay tuned to get more details on these programs. Let's get unpacking. Down payment assistance programs varies from state to state because there are some states that offer their own state-specific ones. For example, a popular one is called CAFA for people in California. That being said, I will go over some of the programs that I can offer in Colorado from my lenders that I'm signed up with. The purpose of these programs is for consumers that can afford the payment but need help with the down payment money. There are many options, a lot more than you think. First, let's go over who offers these programs. It used to be just through HUD called CHFA or check. Those are very popular. That's going through HUD, but they're much harder to get because you have to submit more paperwork and you have to wait for them to process the loan, going with their pace. So you can't rush them. You can't, track where they're going. You have to just call and get updates. And trying to get a hold of somebody is going to be, you have to have patience and you have to be on it all the time. Now, the programs I'm going to go over is through the lender, which they will handle the process. And now there are some conventional programs that offer the down payment assistance too for these higher credit scores consumers, which is exciting because the mortgage insurance is lower, the rate is lower. Now, on down payments, on a purchase price, the down payment is the money down that you have to have because you can't borrow 100% of the purchase price unless you're going with a VA loan or a USDA loan. Those do not require any down payment. The required down payment is 3.5%. So the first mortgage loan amount will be at 96.5% of the purchase price. Then you have to get assistance funds to cover the 3.5% down. So that's where it comes in for the down payment assistance. The 3.5% down is what we're going to go over. And here are some options. The first one is called a grant. A grant means you do not have to pay it back. It is forgivable. This is only through an FHA loan. One option is the grant can be 2% and you can put 1% down. The benefit of this is you will get a lower rate than the full 3.5% grant. Because this is a grant, of course your interest rate is going to be a little higher than a normal FHA loan. But as I expressed many times, rates are not forever. You could always refinance to do a rate reduction. Take the free money if you qualify, right? There are restrictions on these programs, as in you will have to make at least 7 payments, or some programs you have to keep for at least 3 years. This will depend on the lender that your loan officer is signed up with. The other restriction is limited income, limited debt ratio, or the location of your property. Your loan officer can check the location through a website that we use. Now, the other option for the down payment assistance is called a silent second. This is only for a conventional loan. Silent second means they will allow you to have the 3.5% down as a loan, but there's no payment due. This 3.5% down is a second mortgage that just sits there as a lien on title. The benefit is there's no payment unless you refinance or sell the house. You do owe this money, but there are just no payment during the time that you are in this loan. This is why it's called silent second. Now, the other benefit to this is that it will allow you to have a higher debt ratio, and there are no upfront mortgage insurance like the FHA loan. There is a monthly mortgage insurance because you're not putting 20% down or more, but it's much lower than the FHA program. These options are underwritten in-house with the lender, which saves you time and you have control over getting a hold of someone, over getting the timeline when, these will get approved. These are great options to take advantage of. If you need to pre-qualify, please reach out to me and I can see which program is best for you. If you have enjoyed this information, make sure you give me a follow. And if you know of anyone that may benefit from this, please share. More episodes to come. As an active mortgage broker and a mentor, if you have any questions or need a pre-qual, you can reach out to me through LinkedIn, Paige Ashby Lending. And my other contact info are listed in my episodes. Thank you for being part of Unpacking the Home Advantage.